I'm long Spotify, but I'll tell you what we learned from Spotify was the market was in one hell of a better mood to hear that type of news than they were last week when Netflix said their own list of issues that you could take one way or the other, along with a huge beat, and the stock got poleaxed. So it to me that tells me about that the market's kind of being more discerning. The through line in this is that we're getting a lot better reactions to stock that can be taken ambiguously at best in some of these cases, and we're returning to more of a place where we're differentiating because we've got company specific news. So let's return to the mall because that's where I'm always looking. I'm seeing this as an opportunity where we've got a lot of stocks that are off the lows, a lot of stocks that people couldn't get rid of fast enough. I'm talking about names like Nordstrom and Kohl's, huge rallies in both those companies based largely on the fact that they might get taken over someday. If you're long those, is a great time to trim with vol this low. You can look at all kinds of different ways to hedge those. So I'm kind of looking for two-sided trades to take advantage of it. It's take advantage of the fact that we're not treating companies just as one big thing anymore. As correlation moves away from one, you can start adding value on picks. Another name that has turned around finally is Elf. Left for dead, beaten mercilessly with just a freaking steel toe boot since March without doing anything except being related to Ulta. Yesterday and this week, we finally seen the market kind of differentiate between stories that are just different. Some companies have real specific problems. I think Ulta's one of them. So I'm looking to kind of trim my book, take profits, at least in some of those beaten down names. Herbert mentioned it yesterday. You wrote a compelling piece on it for the site. Lululemon, it's as it pulls back, it's $30 off the low. That's a name if you were skeptical of the name going in, if you were long it for a ton of different reasons, as I was. It's a name people love to hate. It went a little bit too far on the downside, but this $30 drop is where you can reassess it and kind of look for a chance to maybe trim your book on these names that have benefited from the uniform bounce that we've seen kind of in the entire mall and consumer space.
On Lulu, in the piece I wrote, and it's something we discussed the other day, but I actually really dove more into it. And I think what was interesting there is that we have people who are diehard longs, whether it's someone like you who's in it nearly 10 years, or the person I quoted, not by name, who was in it for 16 years or 15 years and loved everything about it and didn't just, sell the stock, but is shorting the stock. And I think that to me is compelling, or as we call it, it's a double sell. I think that is, when you see that, you have to really pay attention. And especially when you get these growth investors who are finally saying, no mas.